Hey everyone, and welcome to Talk ETFs. I'm Sumit Roy, Senior Analyst here at ETF.com. My guest today is Roger Bayston, Head of Digital Assets at Franklin Templeton. Roger, welcome to the show.
Yeah, thanks for having me.
So Roger, we're recording this 8 days after the first spot Bitcoin ETFs launched in the US, and things haven't gone quite the way a lot of people had expected. Since the day of the launches, the price of Bitcoin has dropped several $1,000s, from close to $47,000 to less than $40,000. What happened?
When we are talking to customers and clients about these important forward innovative platforms like Bitcoin, the first thing that we're cautioning everybody about is there is inherent volatility that has existed inside of this asset for a long period of time. We don't expect that volatility to move and change immediately overnight. We think there's a number of different institutional maturity apparatuses that come into play that will eventually bring down this a higher level of volatility, but price action goes up, price action goes down. This is really about how to weave things into your portfolio that may be innovative for the economies to come over the next couple of decades, as opposed to weekly or even daily price movements.
And how much money do you think spot Bitcoin ETFs could take in collectively, say this year and over the longer term?
That is, again, really a kind of a speculative thing. There's a whole series of education. So much of the brand of Bitcoin has been around the cryptocurrency itself, not a real thorough understanding of the network, the public blockchain network operating as a kind of a record-keeping system for the data economy moving forward. Those are super powerful trends in business as businesses find needs to use these networks. We would expect Bitcoin itself as a network to continue to innovate and change. And so what expectations really are going to be around how this messaging and how these utilizations of these networks begin to permeate so that investors and platforms that help counsel investors, wealth managers and advisors, begin to move away from the headlines of Bitcoin as a place that that doesn't offer kind of regulated, commercialized business activity to one where it meets and grows more into the regulated framework.
And a minute ago, Roger, you mentioned the Franklin Bitcoin ETF, ticker symbol EZBC. It launched along with 10 or so other spot Bitcoin ETFs. What sets that ETF apart from the others that have launched?
Well, I think there's several things that will end up setting it apart. These are single asset commodities. We understand as such that competing on price is super important. And that's why you see EZBC being the lowest price offering in the market to date with a generous fee waiver for clients who come into it over a period of time. That's one aspect of it. But more importantly, I think, is our journey to this place for Franklin Templeton has really been about how to utilize public blockchains inside of our core business of asset management and capital markets. We're multiple years into that. That being a user of these public blockchains really helps frame understanding about why you would want to be able to be an investor in the tokenomics that represent the activities of these underlying public blockchains. That's, I think, where a key differentiator is, because on that part of the journey of understanding how to utilize them, Franklin has been collaborating with our friends at the SEC for a number of years in bringing this infrastructure into public securities. Our Benji, the tokenized U.S. government money market fund that we have, has been utilizing public blockchain as an official book of records for the transactions for a period of time. We are a leader in understanding and deploying blockchain and collaborating with regulators about this important technology platform that will help bring more operational resiliency to savers and who use these mutual fund assets. And so I think that's a differentiator as well. And then we have just been active in building world-class advice. Digital assets is a really broad category, and filtering through that and finding where there might be capital growth opportunities is fundamental to what we've been doing for 76 years now at Franklin, offering advice. And so those things are really key differentiators as we build this. The possibilities that these assets begin woven into clients' portfolios over the next series of years ahead, those are important differentiators to be a partner with.
It certainly sounds like Franklin is embracing crypto. But Roger, before I let you go, I want to ask you, the Franklin Templeton Twitter account has been tweeting a lot about crypto lately. You even got those laser eyes on your logo now. What's been the impetus for that? And do you think there's any risk that you might get some backlash from more traditional clients who aren't, as bullish on crypto or who don't like the asset class?
I think what you're recognizing is that we are engaging the community that is understanding these, again, public blockchain networks, the utility that they offer for building business, solving problems, creating new opportunities, moving forward. And I think our engagement specifically with that community, the receptivity that we've had in communicating with them about this our kind of support of those efforts, it was surprisingly real positive outcome for us that we had seen so much communication and being able to offer transparency about how we do, why we do things, and being able to engage where those users are a really important part of what we see doing business going forward. So we'd expect to continue to engage the community of enthusiasts in all digital assets as we continue to share our learnings and understandings to position for the long term in these investor portfolios, move away from the kind of the speculation and the daily activity, but talk about really why these are important features to be invested in for the long term.
Fantastic. Well, we're going to have to leave it there. Roger, thanks so much for your time.
Yeah, thanks for having us.